We're now well into 2022 and I'm going to go through my entire plan for the next few years as far as I can see it, how I'm going to be investing and what that means for my overall portfolio in years to come, and show you how I might be able to start living off the portfolio. Welcome back to the channel. Head down and subscribe to the channel so you don't miss a video from me. All the content coming out, stock market related, mostly dividend investing. Subscribe to the channel, then you won't miss a single video. And while you're down there, like the video if of course you like the content and the message and what I have to get out there. I'm going to go through 3 examples of income funds, BDCs, CEFs, investment funds that would be a good example of what I'm going to be getting into in the next few years, certainly this year, certainly as far as I can see it the year after, to build up that income and that cash flow from the portfolio. We'll then have a look and show you what that means in the future, in years to come, probably when I'm 40, and how I might be able to start living off the portfolio to a certain degree as well as other things, and just show you what it might mean for the portfolio. It'll be a very rough example, but will give you a good idea of which way I'm taking the portfolio, and you can see what my plan is moving forward. Not going to be for everyone. A lot of people like value investing, growth investing. This is purely for income purposes only. The funds, CEFs, BDCs that I'm getting into at the moment won't necessarily give me that growth, won't necessarily go up in value. There's the capital growth won't be there, but there's the dividends coming in, the drip, drip, drip. Most of them are monthly payers, and the 3 examples I'm going to show you today are monthly payers. We'll have a look at them seeking alpha, and I said go through a compound interest calculator and show you what that means for the portfolio moving forward and in later years when it might start paying me back and might start paying for my lifestyle. So I hope that makes sense. We'll dive into it now, show you the examples. I'm in all 3 of these already anyway. We'll have a look at the average yield from them and apply that to a compound interest calculator and see where we sit in a number of years' time. This is the plan moving forward. This is what I'm going to be doing. This is what I am already doing. Just gives you some transparency as to what I'm doing with the portfolio. So in the portfolio to start with, I said I'd show you the income funds as an example of the type of thing I'll be getting into, and I'll show you 3 examples, and then we'll look at where those 3 examples, a combination of the 3, an average of the 3 in terms of dividend income and their yield will put me in years to come. So I'll give you an example where I kind of see it going and what I'd probably quite like from this new strategy moving forward. So one of them is PIMCO, Corporate Income and Opportunity Fund. We can actually have a look. Market data within the IG platform gives us a good indication where it stands, gives you the fundamentals, gives you a breakdown of bits and pieces about the fund. But the main focus, I shows you the client sentiment as well. Everyone's long because it's just a fund, you hold it, you don't short it. The main thing here is 8.68. Gonna get a calculator up and just go 8.68, minimize that. So the next one, I said I'm in all of these, so AG&C is the other one. We're gonna go into market data again and just pick up the yield, which is 9.25, so add 9.25 to that. And then the last one, just as an example, I said these are just examples, ones that I'm in, they all pay monthly, is the XAI Octagon Floating Rate Alternative Income Term Trust. Such a mouthful. Market data, let's hope that they have the dividend on here, some of them don't. No, this one hasn't got the fundamentals for some reason, so we'll go into Seeking Alpha and search that. So it is the XAI Octagon Floating Rate Alternative Income Term Trust, this one here, and we have a dividend yield of 9.32. So add that to this, 9.32, and then just divide the whole lot by 3, gives you the average. So we're at 9.08. So let's say a 9% yield. So these income funds, they're purely income funds. In fact, let's see how they're doing performance-wise. This one's 1.68% up, AG&C is 1.67% up, and PIMCO's down. So these are not growth. These are not. I'm not getting into these with the hope that they grow by 10% each year. I'm getting into these simply for the monthly income. So we're going to grab a compound interest calculator, which is my favorite thing to do, as you all know. And I found a different one this time, so we'll use this one. Initial investment, roughly what I've got in the portfolio at the moment. That has changed more recently, as the keen-eyed viewers will know. As I said, for reasons I'm not going to go into in the video, but my portfolio is currently sitting at circa 40. My monthly contributions will be about 1,000. Sometimes they'll be 750, sometimes they'll be 1,200. I have a commission-based job. I get paid a different amount of money every single month, and it can vary by thousands of pounds. I've always worked in a job where I've never had the same amount
2 months in a row. Sometimes I'll be able to put 1,200 quid in, sometimes I'll be able to put £800 in, but as an average, I'm hoping to be able to get £1,000 into the market on a monthly basis. If I can get a pay rise, that'll go up. The more I pay down certain loans and outgoings, the more that will also go up because I'm paying less out in loans and things like that. If we can remortgage in a year and a bit and get a better interest rate, and we pay down some of the mortgage repayments will be less. We're staying put for the moment so we can put more into the market yet again. So just to give you an idea, £1,000 at the moment could potentially go up, but it's just a safe bet at the moment. Length of time, I'm knocking on the door of 33. I know I don't look it, but I am. I'm quite happy where I am. Job-wise, don't need to quit just yet, unless YouTube takes off. Watch all of my videos because I need my watch time to go up. So I'm going to put in 7 years, brings me up to 40. That's a good amount of time. I'm in no rush to leave my role. Estimated interest rate, that's 9%. Wouldn't do it at 8. Let's just make it exact for the sake of making it exact. And then we're going to compound monthly because it's just going to come out monthly. So if I go calculate, it brings us down here. A lovely little graph, shows you exactly how the value of the fund will go up, or the account will go up, and we end up with 192,126 after 7 years. Again, that will be more because there'll be other investments, there'll be along the way other chunks of money that I'm going to be able to put into the portfolio, and there may be months where I can only put 500 quid into it, but I think that should be more. So let's work on 192. Let's get your calculator back up again. I'm going through this really quickly because I don't want this to be a long video. Just give you an idea of where I'm taking it and my vision for the future. 192,000 times, I'm going to go 8% rather than 9 because my starting portfolio has some lower yielding stocks, shares, income funds and REITs in it. And that's £40,000 worth. So averaged out up to 192, going into the higher yielding ones, you're looking at a little bit less at around 8. And the yield could change over time, of course. Some of them could stop paying a dividend, some of them could increase the dividend. There are too many variables. This is just an overview. So 8% equals, that gives me this figure on a yearly basis. And then we're just going to divide that by 12 because it'll be monthly. So I should be able to take from the portfolio, not including any 4% rules and things like that, because we're not in the type of stocks and ETFs and things that will allow that kind of growth. So we are £1,280 on a monthly basis, just taking that drip feeding out of the portfolio. So this is a nice figure. This will help me take a step back. This will help me certainly to pay a lot of mortgages and things like that, and certainly where I see the portfolio going for the moment, that may change, but that gives you an idea of where I'm steering it towards and gives you a prediction in the future of where it should end up, providing I have to sell out of it for any particular reason, or of course it could be more if I'm able to put a bit more money into it. So that's where we are with the portfolio. I have a few of these income funds already, Ultra Group. I've got the Global X Nasdaq 100 covers cool one. I've got quite a few already that are high yielding, so we are heading that way. And I've started that style of investing anyway. So that's where I'm taking the portfolio. I'll see you out.
Now, I find this super interesting, so I want you to comment in the comments below and let me know which way you're taking your portfolio, what your strategy is for the year, and whether you're going growth, high risk, value, dividend growth, cyclical, I don't know, any other type of investing that you can think of, whether you're trading, whether you're doing options. Let me know, it'd be good to have a chat about it. But I'm going income. That's my goal because I just want that cash flow. Hopefully that's kind of outlined that and you can kind of understand why I'm doing that. Hopefully that gives me a nice warm feeling if you're understanding why I'm doing it and would like to do the same and replicate it. That'd be great. Obviously, as always, like in the description I've put down there, it's not financial advice, but it's just what I'm doing with my portfolio. And I just want to be transparent with you and show you which way I'm taking it, and you can follow along the journey. So that's it for today's video. Hopefully that was helpful for some of you. Share it with a friend if it was, and you know somebody that needs to see that. Subscribe to the channel for more videos so you don't miss one. Like the video if you like the content. If you're still here watching it, the likelihood is you like the content. It takes you 2 seconds. Just like the video, really helps, gets it out to the right people. And otherwise, I'll catch you guys in the next video. See you later.